How we doing out there? Welcome to Trade School here at ReadySetCrypto. My name is Doc Severson, and I'll be with you for the next few minutes here. Today we have an interesting topic, which is chart patterns and probabilities. So we talked about chart patterns a week or two ago and talked about just some typical ones that we see on markets. We see bull flags, we see bear flags, we see horizontal consolidation patterns, we see cup with handles, we see double tops, double bottoms, we see all types of different patterns. And today you got an interesting question from somebody saying, hey, is there a way that we can attach a probability to the actual chart patterns that are there? Well, actually, yes, there is. There is a gentleman by the name of Thomas Bulkowski. So it's Bulkowski, Thomas Bulkowski, that I want you to get to know. And he can talk to you about chart patterns and probabilities. So what I'm going to do is I'm going to blow out of this thing and I'm going to bring up something that I did many, many years ago. So these are flashcards that I built a long time ago. This is back in 2005. And so what you would do is you would print these off and then fold them over. You'd print them off on one piece of 8.5 by 11 paper and then fold them over and then have somebody show this to you. And you would say, oh, that pattern is, in this case, it's an ascending triangle. And then on the back of the flashcard, what we'd have is, let's see if I can find this there. There it is. It's a bullish ascending triangle pattern. And let's do this. I'm going to get out my magic drawing pen. Give me a second here so I can pull this out and get a little annotation going here. So what I want to call your attention to is this thing right here, success rate. So for each one of these, I have an associated success rate for each of these patterns. Now, Thomas Bulkowski is the guy that came up with these rates. So he did testing and testing and testing on markets after markets after markets and looked for these patterns and was able to assign a probability to each one. So like in this case, the success rate is 68%, which improves to 98% if you confirm the pattern. So if you get a confirmed breakout above that, because what you tend to find is with patterns that have a defined breakout level is that you see it peak above there and then it gets hauled back in. It peaks above and then it gets hauled back in, but it's 98% of it actually closes above that breakout level. Okay, so there's many, many that are like this. So I'll go through a few of these today, but what I'm mostly going to do is call your attention to some of the other resources that are out there. So like this one is a bear flag. So again, you'd look at this and you'd say, oh, that's a bear flag in the middle of a downtrend. Okay, so bear flag pattern, 88% if the breakout is confirmed. Right there you go. Okay, so these are some of the other things about this. The volume should decrease through the flag. So as it goes into the flag, the volume typically will decrease. And then when it breaks down in this case, which is the opposite of the bull flag, typically there is some type of heavier volume as the price goes through there. Heavier volume indicates disagreement, not agreement. You would expect it to be agreement, but it's disagreement. A lot of people getting on the wrong side of the price. Okay, greater than 150% of normal volume must accompany a valid downside breakout. Okay. Let's see, anybody on board today? Any questions? I'll just go through a few of these bear flag pattern or a few of these patterns that are out there. Let's go to the bull flag pattern. And it's about the same probability for bear versus bull, right? So keep in mind, keep in mind that they don't necessarily look all this linear like this, but usually there's a little bit of choppiness in this area, but you get the point that this is what one of these will look like. Okay, declining volume through the flag. Excuse me for a second here. Okay, can you hear me again? There we go. So trade the pattern. Typically, again, you're going to get little breakouts along the way, but the real breakout should have some volume in it because of people disagreeing with what's going on. Okay, let's look at another pattern here. Cup with handle. Success rate. This one's a little bit more obscure. I don't see too many of these patterns out there on a day-to-day basis. A lot of times these will set up, but they take months and months and months to set up. So like in this case, the duration usually takes at least 7 weeks to form, but some can take over a year to fully form. This, I would agree with this. Excuse me here. So cup with handle pattern typically comes off of a strong uptrend, and then you see just sort of this base setup. And, you know, quite honestly, I don't see too many of these. What we did see with the NASDAQ, so you guys are all aware of what the NASDAQ is. The NASDAQ set up one of these over the course of the last 15 years. So sometimes these can be enormous in scope. Now, the upside target for something like this, a cup with handle pattern, is going to be essentially the distance from the bottom of the cup to the neckline, and then you're going to extrapolate and project that up from there. Okay, so the price target will be approximately the depth of the cup to the upside, past that neckline. All right, let's look at a couple more here. In fact, I've got a whole bunch. I think I have something like 25. So I'll go through a few of them here. Here's a double top pattern. Now notice the double top pattern starts at only 35%. Why is that? Well, this is very common to see double tops like this. It's very common to see the price come down to here and then come up to this level, come down a little bit, and then boom. Now, what do you think could help us understand when we should or should not go bearish at the top of a double top pattern? Well, I would say, and this goes into the topic material that we've been talking about lately, if you have a larger time frame trend moving strongly to the upside, then this can be just a quiet little, this will be a signal chart pullback, and then eventually this gets destroyed to the upside again because we have larger time frames moving higher like this. Right? So you don't see these all that often in most markets. You don't see double tops very often. Now, on the other hand, you do see double bottoms quite a bit. Now, let's see if I can find a double bottom for you guys. Here is a double bottom pattern. So I will see this all the time. I will see something like this all the time, especially in the market heading higher. And then what you have is you have a larger time frame pullback, like a weekly chart might be heading higher, and then all of a sudden you get a more significant pullback, and it will actually double bottom. It's very, very common to see something like that, especially an undercut. Okay, the second bottom will undercut the first bottom. Love to see that. I love to see the second bottom undercut, because what that does is that convinces everybody that's been holding off. They weren't able to get any of this, the meat of this move, and then the price comes up here and then it starts moving down, and then once it undercuts, all of a sudden everybody says, oh, this is definitely now a lower low, so now let's short this market. And it's too late. It's too late. This is usually when somebody of size will step in and take this thing long again. So double bottom patterns I do see quite a bit. Notice that rising to 97% if one waits for a rise above the confirmation level. That's a long way. That is a long way. So confirmation level is above this level here, above the pivot high. So now the price is making a higher high, and that's why it's 97% at that level. Okay, Let's see if we have any other ones that are of interest out there. If there's anybody that's on watching right now wants to make any kind of requests for a different type of pattern. Okay, here's an interesting one. Head and shoulders pattern. Again, I'm making this almost look too perfect here. And if you can believe it, I did this all in Word. Each one of these candles was drawn individually in Word. It was a pain in the tail. It was tough to do. This was a long time ago. Okay. 93%. I would disagree with that. I see a lot of head and shoulders patterns. So what I see these days is a lot of things like markets will be heading higher. Then all of a sudden we drive to an individual low, and then we see a higher high like this come down, and then we see a lower high like this to the neckline. And then everybody sees it. It's almost funny. Everybody sees it, and then what happens is it goes slightly under there, and all of a sudden, bam, it's gone again. So I see a lot of head and shoulders patterns fail. And why is that? It's because everybody can see it now. So when I did this back in 2005, and Bolkowski's numbers were based, say maybe 20 years ago or so. So when I did this originally, very few people really understood chart patterns back then. So this is 20 years later, and there's a lot more technical traders that are out there now that understand chart patterns. But I have seen this from time to time, and usually it works really well if nobody is expecting it. So it works the best when you see something happen like this, like here, where you're setting higher highs and higher lows, and everything looks good. It's just a deep pullback, and then what happens is this fails. It works best when nobody expects it. When nobody's able to see it, and nobody's talking about it, and all of a sudden, because if you do this on the hard right edge, and if you don't see this part of it here, of course, it looks like just another deep pullback, and it looks like just another rally that's heading up. I will also see these quite a bit on markets so you'll see it quite a bit like this. Where it's almost tilted on its side. You typically don't see these tilted to the other side. So in other words, a market that's heading lower like this, I typically don't see head and shoulders that are on this sort of decline. You typically don't do that. Typically, it's something that's heading to the upside because rising patterns break to the downside, right? That's rule number 3. Hey, Tag. Okay, so head and shoulders pattern. Let's see, what else we got here? Oh, let's see. Oh, yeah, of course, there's the inverted head and shoulders. Now, this one I do see. So this is a market that's heading lower. Okay, so here's something that's heading lower. And again, these typically I do see these on, it's rare when you see them just absolutely horizontal like this. You do not see those normally. Normally you see these things, canted on their side like this, like that. So you have, a descending pattern, and then all of a sudden, what happens is, and I didn't draw this wrong. Right, let's start over again. So what happens is you have something heading down, okay? So typically it'll do something like this, comes back up to a trend line, then you have a lower low. So everybody at this point is just assuming that this is heading lower, right? And then what happens is it comes back up to this, let's draw in a little bit of a trend line here. It comes back up to that trend line, and then it fails. And everybody just assumes that, well, this thing is toast. And then what happens is a higher low is printed. So those of you that are going to be going through the fractals class will get this. Higher low gets printed, and then boom. That's the reversal right there Lower highs, lower lows, all of a sudden higher low, higher high. You got your reversal right there. So a lot of folks will look at these different chart patterns and say, oh, it's, witch doctor, black magic, things like that. Ooh. No, it's not. It's nothing to do with that. This is the way that markets move. And the fact that a higher low gets printed means that we'll end up with a right shoulder here. And then this is usually when too many people were on the wrong side of the price, wrong side of it, right? And in this case, they're taking bearish trades all the way down to the bottom, and they have to cover to get out of their position, and that helps drive the price higher. So inverted head and shoulders pattern. I love this pattern. I see this one all the time. Even intraday, I will see this all the time. All right, let's see what else we got. Now, there's things out there that are like, here's a triple bottom. Again, this is drawn perfectly. Markets don't do this sort of thing. So triple bottom, a lot of times you'll see something like this. You'll see something driving down to here, comes up, maybe undercuts a little bit, comes back up again. And a lot of times the third one will be a higher low. This will be a higher low. So this is almost the same thing as an inverted head and shoulders, right? So it's almost the same thing as an inverted head and shoulders. It just didn't have that pronounced dip in the middle. That's really the only difference here. But 96%, one of the highest performing chart patterns. Again, I think it's a combination of triple bottom and inverted head and shoulders. I see these fairly reliably, and they do work nicely because it is not just a chart pattern. It's the market flow. It's the Dow theory. It's the higher low, lower high kind of thing. Oh, let's see. We've also got triple top. So triple tops. Now this does align with something that I do believe in. So there's one thing that you'll learn from the class I'm doing is that tops are a process, bottoms are an event. So markets, before they top out, will typically, it's agonizing to watch them top out. So bulls will drive this thing forever. Right, not right now, right? We're dealing with this sort of event right now. We're looking for the event. We haven't had the event yet, but a lot of times it takes forever for a market to top out, and then finally it just keels over. But you'll see this sort of thing. You'll see event-related bottoms. Bottoms are usually not very complex. This is why the current pattern with Bitcoin is really kind of very odd, because it's a descending triangle, which I'll show you in a minute here. And we haven't had that event yet. So if this just goes higher from here, I'll have to say, okay. But again, tops are a process, bottoms are an event. Let's see if we can find that descending triangle. There it is, the bearish descending triangle pattern. Okay, 55%, which improves to 96% if you confirm the pattern with a close below the downside breakout level. Okay, so this is typically what we'll see. We'll see this thing pounding, pounding, pounding. Notice how these are lower high setup. This is classic, right? If you go look at a chart of Bitcoin on the weekly chart, this is exactly what you will see. This is what I'm hoping for from Bitcoin. I'm hoping that we do eventually break this, and it leads to a cascade, an event, a cascade of selling, which eventually breaks higher from there. This is sort of the event that I'm looking for, because it is going to be scary, noisy. You're not going to know what to do. You're going to be convinced that this is it. It's over. Sell all your coins if this happens. So this is what I would expect to see. It like a descending triangle pattern should break eventually to the downside. Anything can happen, right? So if this does break above the descending trend line, if the price breaks above there and prints higher highs, then I have to go with it. I have to say, whoops, reversal. But this is kind of what I'm hoping for here, because normally a flush like this puts an enormous amount of energy into a market. It creates this kinetic type of movement that will move for a long time, right? All that kinetic movement. So we saw that with the market going like this into last fall, went up like this, and that amount of kinetic energy doesn't just evaporate. It doesn't just, go into volatility like this. Notice how it was huge, up at the top. Tops are a process, and then all of a sudden it started building this descending triangle pattern. And so it's gotten very, very quiet now. Notice how quiet it's gotten, and the price is kind of consolidating into the apex of this triangle. Normally, range contraction like that will lead to massive range expansion. Which way is it going to go? Don't know. Don't know the future. Don't have my crystal ball in front of me, but we have a success rate, which is showing us that at the very least, we should expect 55% probability of breaking the lower trend line of this. Not what people want to hear right now, but I think this could actually be good news if it flushes and adds all that kinetic energy back to the market. So Tig's asking a question, 96% rate on the triple bottom. Is there such thing as a quadruple bottom? Nope. Nope, because usually they fail. Usually they fail after 3 tests. It usually fails, and that's it. Usually it breaks the lower trend line. So there is no such pattern that I'm aware of a quadruple or a pentuple or sextuple bottom or anything like that, which is kind of what we're leading towards in Bitcoin right now. I would say the Bitcoin chart right now is more of a case of range contraction. So the range is just contracting. It just happens to be in a descending triangle pattern. So we have a good support floor, and many are saying that support floor is there because of the miners. Who knows? We don't really know right now. We'll know in a year from now. We'll be able to look back and say, well, that was obvious that it was going to happen. But right now, all we can do is just say, look, we got a pattern, we got support, and price is king. Price is everything right now. So this is the important thing right now. The weekly chart is still doing this. This is the weekly chart. Still doing this. Until the weekly chart starts making higher highs and higher lows, higher highs and higher lows like that, until the weekly chart starts trading in this direction, I can wait. I can wait as long as it takes for this to start trading in that direction instead of trying to pick the bottom, pick the bottom, pick the bottom, pick the bottom. Right? You're going to see a lot of people picking the bottom and getting hurt until this reverses. But you got to be patient for it. You have to have enough faith to say, well, this will eventually reverse, so I can wait it out. And sometimes that's what you have to do. Okay. Yeah, I'm not aware of a quad bottom. You can look around for it, but, at least on Bolkowski, Thomas Bolkowski is where I got all these numbers from. So I was working with a mentor of mine at the time back in 2005, and he gave me this project. He goes, hey, can you do something around chart patterns? And he goes, here, you can borrow the books off my shelf. And they were great big hardbacks by Bolkowski. I mean, these things weighed a ton, and they were like $70 a piece. And he's like, take them, put something together. And, we actually used to sell these out in various websites out there, like actually Chart Pattern. I don't know if chartpattern.com still sells them, but they used to. So I'll look to see what I can do about incorporating these into the program at some point. It's just more of a case of like, how do I do it? Let's see, what else do we have here? There's things like base on a base pattern. Remember what I was talking about? If you caught I think it was in yesterday's newsletter, what I was talking about, look, what I'm looking for is I'm looking for stair-stepping price action. I want to see stair-stepping price action, because when that happens, we're going to be in quiet and trending bull markets again. So base on a base pattern is just another way of saying stair-stepping. So this is typically what happens. And then again, for those of you that are starting to catch on to what I'm talking about as far as fractal energy movements, we have range expansion moving to range contraction, building up energy to the point where it says, bam, and it exhausts itself. So it goes into range contraction again, builds up energy, and then bam, the same thing happens over and over again. So I see this type of movement. Again, forget about the overbought and oversold. Overbought and oversold are not going to be any use whatsoever in patterns like this. There is no such thing as overbought, oversold when you're on a base on base or stair-stepping pattern. It's useless for that type of movement. Maybe you can see some divergence in there, okay, but it's just not going to be very helpful for that. All right, let's see what else I have here. Let's see, we talked about the ascending triangle pattern. Let's see. Oh, yeah, here we go. A bearish rising wedge. These are cool. Okay, so what do we have here? We have an ascending pattern. An ascending pattern is going to break out to the downside eventually. Now, let me share with you just a little bit that I've found on these rising wedge patterns, because I've been watching these things for years. And what happens is you get something happening like this. You know, ba-dum, 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 up and down, up and down. And then just when everybody has got these things completely and totally figured out, what do you think happens? It breaks out to the upside first. And everybody says, oh my gosh, what is happening here? Physics is all wrong, right? I thought Doc said ascending patterns break to the downside. Well, they pop out to the upside first, and then they collapse in a heap like this. Something else that I've noticed is a lot of market rallies will do these kind of things. So we start off with the disgust phase, and then boom, we come strong off the bottom. And then we'll move into what's called an S curve. So we do tend to, after the short covering evaporates and the market achieves a sort of a sense of, I guess, stability. This is almost like, you know, when we're doing one of those blast offs, like when we're shooting, oh, what are the SpaceX rockets? Oh shoot, what are they called? Falcons, when we're shooting a Falcon off, right? What'll happen is it'll actually reach a state where they have to slow it down. They have to throttle back because it's hitting max Q, and they have to wait until the air gets a little thinner, and then they can pour on the coals again. This is typically what I will see from most market rallies, is I'll see it strong off the bottom, it gets thick in the middle, and then there's what I call a parabolic tail. So you have to watch out for the parabolic tail. The parabolic tail is where you get the FOMO, fear of missing out. So at this point, the bulls and bears are swapping back and forth, and then all of a sudden up she goes again. And then, oh my gosh, we're going to miss this rally, and everybody chases after that. And the bears get roasted yet again. And then this is where it drops. So watch for the S pattern. The S pattern will get involved in these kind of moves like that. So bearish rising wedge pattern. Again, pretty high probability for this will eventually break to the downside. But most of these will pop out to the top first. That was the biggest loss I ever took in the markets. And it was fairly early on in my career. I was like 6 months out working on my own. I'd quit my job, and I was feeling pretty salty. Like I almost knew what was going to happen next, right? That's what I thought, because the price was in a channel like this and moving up and down, and I was just trading this thing back and forth, and just having a grand old time. And then all of a sudden what happened was it popped outside the upper trend line, and I just completely lost it at that point. I got crushed, and it was a big lesson for me. It was a big lesson for me that, you know, it's just another lesson proving that when everybody sees the same thing, usually everybody's going to get rolled. When something is too obvious, it's going to break. Okay. Is there a book by Thomas Bulkowski you would recommend? Oh, I don't know. He's done a number of them. You might also check his, I think you can find him. I think he's got his own website out there as well, too. So you can, I'm sure a quick Google search would tell you where that is. And gosh, Tig, I don't remember the exact one that I used for it, but I just remember that it was enormous and huge. And, my car was actually tilting to one side because it was on the passenger seat. It was that heavy. So the guy's very, very thorough with chart patterns. After looking at chart patterns, though, for the past 15 years, what I would say is just understand the spirit of what chart patterns are trying to tell you. Understand the spirit. In this case, the spirit here is that a rising pattern will break to the downside. So you don't have to know, like, well, this, we've had 3 touches of the lower trend line and 4 touches of the upper trend line, so therefore it meets the equation necessary for this to meet a bearish rising wedge pattern. Just understand the spirit of what you're looking for. And eventually you'll see kind of the art to go along with the science of this as well, too. Let's see if there's anything else cool. Okay, there's a bullish falling wedge. Bullish falling wedge is kind of the opposite thing of the bearish wedge. So this is typically what I see. Now, the one thing there's a couple of different permutations of this. Just like the rising wedge, a lot of times what I'll see is I'll see a complete and total puke below the lower trend line of this before it eventually, remember, bottoms are an event, right? So I'll see this just like in the bearish rising wedge. A bullish falling wedge will do kind of the same thing. It usually pops out through the lower trend line, which is not what it's supposed to do according to the definitions, but it's what I've seen happen. And it's because people panic and sell out. And that's what it's all about. That's what you want. Understanding human emotions that come through crowd behavior is really what you're doing here with technical analysis, with chart patterns, anything like this. You're trying to understand when a herd gets together, what do? Start watching people that get together. Start watching people. Become an amateur psychologist, and you'll understand markets a little bit better. Okay, let's see if there's anything else here. Guys, if there's any other questions, let me know. Now, here's one that I do see quite a bit, which is a pennant pattern. I see this intraday. I could show you a chart of the NASDAQ futures from this morning that it set up a pennant pattern for about an hour, back and forth, back and forth. I see these things all the time in every market and every time frame. So this is something where it just coils in and vectors into the apex, and then normally, okay, like I said here, so the success rate is 81%. Normally, the way that you think of these is that it will break out in the direction from whence it came. Normally, you think of it that way. However, I've seen quite a bit where I'll see something like this, right? So it's something where it's like we've been coming from this direction, and then I'll see a little pennant here, and then I'll see a false break out of it in the opposite direction, and then I'll see it just take off like that. Now, what is that all about? Again, when everybody sees the same thing, everybody's likely to be wrong. Most people, when they see a pennant after this, they're expecting it to break in this direction and are shocked when it actually breaks in the opposite direction first to get everybody leaning in the wrong direction, and then that bakes them. This is what I see and happen in markets all the time. But a pennant pattern is actually a shorter pattern. It's a very short little pattern. There's also what's called a bullish symmetrical triangle, which is typically much longer. So this is where you have something that shows up for, on a daily chart, this may be weeks, coiling into the apex of that triangle. Pennants are very short little patterns. Okay. I think I've pretty much gone through most of the ones. So let's, I'll show you just a bullish symmetrical triangle just so that you can see the difference between that versus the pennant. Okay, here's the pennant. Pennant's a short little guy. Symmetrical triangle is much, much longer. So Bolkowski says this is one of the most reliable formations. The longer that coils, the more likely it will eventually. So it's building up a lot of energy on a lot of different time frames, and this is why it typically is more reliable, especially to the upside. So with that in mind, guys, in a bear market, I see bear flags all the time. Bear flags, there's a big difference in a bear flag between, you know, a lot of people look at something like this happening and they're like, oh, it's a bear flag. No, that's a V bottom reversal, dude. That thing's heading higher. But this is a bear flag. A bear flag is when you have something and it just barely can get out of its own way. I mean, it's torturous watching this thing. That's a bear flag. So you should look for a relatively low slope. And eventually what will happen is this will break. And sometimes there's a little bit of a bar fight, what I call a little, you know, fisticuffs around the neckline before it finally releases. Other times it'll just completely puke right out of it. And it usually happens overnight when nobody's watching, when the liquidity's low. So that's a bear flag. Get used to the bear flags. But for right now, again, we're in this big, or at least as it relates to Bitcoin, we're in this big descending triangle. I want to see not only, again, with lower highs, lower lows, I want to see a break of that trend line and a higher high to make me think that we are out of this pattern. Again, we've been in this bear market for maybe 9-10 months now. And that's actually a little bit early. A lot of these take about a year and a half to fully, you know, wash their hands of the pikers that jumped on board. When bear markets usually reverse when people are least looking for it to happen. What about predicting the height of the breakout? Height of the breakout is, it's actually quite simple. It's relatively consistent with this. A lot of times you just measure the open end of the triangle, and that's usually where the height of the breakout is. But I think it's easier to do this if you're actually using the fractals, because the fractals will tell you when you have exhaustion on the breakout. And so what will happen is you'll get the initial breakout and then it'll consolidate from there, because a lot of times these projections say, well, that's as much as it's ever going to do, which is bunk, right? That means nothing. If you're in the middle of a large trend, yeah, it's going to consolidate up here, but once it builds up the energy again, it's going to be off again, right? It's going to be the next pattern. That's going to turn into this symmetrical triangle. It's going to turn into a bull flag. It's going to be off to the next pattern. So it's almost like a baton race. You're handing off the baton to the next pattern. Range expansion, range contraction, range expansion, range contraction, whatever pattern or form that it takes. A lot of times these symmetrical triangles show up because maybe a larger time frame chart, like a weekly chart, maybe even a monthly chart, is at exhaustion and it needs some time to catch its breath. Okay, guys, I think I've droned on here for 40 minutes, so I think this is probably a good time to wrap things up. I want to wish you guys a great weekend and hope that everybody's doing well, right? And so you guys have a great weekend. I will see you this weekend. There goes a sight from my soul. There goes a sight from my soul. There goes a sight.